Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, September 18, 2024. Hope you're having a fantastical day out there. Markets did not turn out to be in a good mood. I mean, it was kind of back and forth in the morning, and then the Fed chair came out and talked, and they shot up. I mean, I'll go to the chart in a little bit. They shot up, but then fell back into the red. You know, everybody's been praying and hoping. And they even got a bigger rate cut than what they wanted, and then the markets head down. So anyways, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All right. Well, let's get into these markets. Dow Jones was down 0.25%, 103 points, closed at 41,503. S&P 500 was down 0.29%, 16 points, closed at 5618. NASDAQ down 0.3%, 52 points, closed at 17,575. The VIX was up 3.52% today. It's at 1823. Canada down 0.36. Brazil down 0.84. And Mexico, the lone bright spot here in the Americas, was up 0.61%. Over in Europe, Germany was down 0.03%, the UK down 0.68%, France down 0.57%, the Netherlands down 0.85%, Spain down 0.16%, Italy down 0.37%, Switzerland down 0.55%, and Portugal down 0.93%. So a whole lot of red. Russian exchanges in the red today. The MOEX down 0.77, the RTSI down 1.03, and the Asian markets, the Nikkei was up 0.37%, Australia up 0.01%, New Zealand down 0.64%. Chinese markets appear to have been open today. Shanghai was up 0.49%, Shenzhen Component up 0.11%, China A50 up 0.34%, DJ Shanghai up 0.37%. Hang Seng has not been open since the 17th, and neither has the Taiwan weighted. All right, well, let me bring up my chart here, and then we can look at it. So this is the minute chart that we're looking at. So here's the start of the day. You can see the little dashed line. This is the Dow Jones. Was in the red most of the day. Then we had the Fed meeting. It went into the green, and then boom, just shot up. How much was it up at one point? About almost 1%. And then we had a bunch of volatile back and forth, and then finished in the red. Let's go over to the S&P 500. Very similar, kind of hugging that flat line. Then the Fed meeting, boop, popped up about 0.2%, bunch of zigzags back and forth, finished in the red. And then same thing with the NASDAQ, a little more pronounced with the ups and downs. Let's see how high it had gotten at one point, about 1.14%. And then, like I said, at the closing of the session, just crashed. So weird. All righty, well, let's head on over to the market recap. S&P 500 snaps 7-day win streak as Fed delivers jumbo rate cut. Is that like jumbo shrimp? You got regular shrimp and jumbo shrimp. All right, where am I? Here's my notes. U.S. stocks fluctuated on Wednesday following the Federal Reserve's decision to implement a 50 basis point rate cut. That's 0.5% for you normal people. The first since March of 2020, the larger than expected cut marks the beginning of a rate cutting cycle aimed at supporting the economy after a long struggle with inflation. We still have inflation, so I'm not sure what struggle that they have won, but the inflation's still here. I mean, no prices have. Oil prices have gone down in dollars slightly, but when you look at it in the price of oil, in the price, if you were to start over, the price of oil in relationship to an ounce of gold is actually cheaper today than it was 3 or 4 years ago. So it really is. I think it's about matched where we were when things went, almost into the negative. So don't be fooled by the dollar. Prior to this decision, markets were divided on whether the Fed would opt for 25 or 50 basis points. In addition to the rate cut, the Fed raised its forecast for further rate cuts this year, now expecting 2 additional 50 bips reductions. So in total, that would be a 1% even, compared to a June prediction of just 1. Capital Economics described the move as, quote, hawkish 50 basis points, that's in quote, cut, highlighting that the decision was not unanimous and the central bank expects only another 50 basis point of cuts throughout the rest of the year. In corporate news, U.S. Steel's shares rose following a Bloomberg report that Nippon Steel extended the review period for its $14.1 billion bid for the company. A final decision is now expected after the 2024 elections. Intuitive Machines saw its stock jump 41% after securing a $5 billion contract from NASA to provide lunar communications and navigation services. Do we have anyone on the moon? Seems like a good use of tax dollars. And wrapping up, meanwhile, Victoria's Secret gained 3% after Barclays upgraded the stock, citing a more balanced valuation. All right, so that's the news. Let's dive a little deeper into the Federal Reserve cuts interest rates for the first time since 2020. So this was the first article I read today about it. The Federal Reserve cut interest rates by 50 basis points to a range of 4.75 to 5% on Wednesday, marking the first rate reduction since March of 20. This shift in strategy comes after 14 months of holding a key interest rate at a two-decade high. Yeah, 5.5, two-decade high. Whew. Fed officials had signaled that the cut was coming, but there was a debate about whether it would be 25 or 50 basis points. The decision for a larger cut indicates that the inflation is running low enough and risks to the labor market are high enough to warrant a more aggressive move. With inflation nearing the Fed's 2% target, policymakers are transitioning from an inflation-fighting stance to a preserving employment stance. We'll see how that goes. The central bank expects the further rate cuts, totaling an additional 50 basis points over the next two meetings. The Fed's dual mandate from Congress requires balancing low inflation with preventing high unemployment. Well, they've done such a good job with the inflation over the last 2 decades. I can't imagine they'll screw this up too. While the rate cut is intended to ease borrowing costs and boost economic activity, there are concerns about reigniting inflation. That's my concern. Higher interest rates have already slowed hiring and made mortgages less affordable, contributing to a rise in the unemployment rate to 4.2%. It's in real unemployment, it's probably more like 8%. Not all policymakers agreed with the decision. Fed Governor Michelle Bowman voted for a smaller 25 basis point cut, breaking the committee's usual unanimity. All right. Well, that's that. Let's get into some data for the day. August housing starts comes to us via First Trust. Nate Gurzy, economic analyst, put this one together. In August, housing starts rebounded, but remained below the pace of 2021 to 2023. The focus for builders has been on completing existing projects, with completions jumping 9.2% to an annual rate of 1.788 million, the highest since before the Great Financial Crisis. Despite strong completion activity, the number of homes under construction has fallen by 10.1% since the start of 2024, a decline typically seen during housing busts or recessions. The housing market's limited new construction is contributing to elevated home prices and rising rents, with rapid population growth adding pressure. Well, I know a way we could get rid of 50 million people and open up a lot of housing. Builders face challenges from government regulations, labor shortages due to low unemployment. There would be a place for people to work. If they're out of work, hey, they can go build houses. I mean, I know that's not typically how it works. Let's see here. And relatively high mortgage rates. However, there are tailwinds for housing construction, including many homeowners reluctant to sell their homes with low fixed mortgage rates, and millennials, the largest living generation, entering the housing market. Well, if the boomers would die off faster, that would really help things, because, they're staying in the workforce longer because, being boomers, they didn't save because they're all about, what can I do for myself right now, looking at my parents. And, hey, it's just the way it is. All right. Additionally, with the Federal Reserve expecting to start cutting interest rates, mortgage rates should trend lower later this year, potentially supporting the housing market. While housing is unlikely to drive significant economic growth in the near term, a housing bust similar to the 2000s is not anticipated right now. All righty. Last up, this comes from Zero Hedge. Wall Street reacts to today's 50 basis points, but no crisis rate cut. So basically just a lot of feedback from Wall Street. So let's see what they had to say. The Federal Reserve delivered a surprising 50 basis point cut, marking the first rate cut since March of 20. We already talked about that. Shifting from its expected 25 basis point reduction, the decision signals the start of a new rate cut cycle aimed at stabilizing the economy following prolonged battle with inflation. Notably, the conditions from June to September showed little change, yet the Fed now predicts more rate cuts for 2025 than previously forecasted. Economists and market analysts reacted to the unexpected move, with some praising the cut as a victory for Fed Chair Jerome Powell. Woohoo, way to go, Jerome. Diane Swank from KPMG and Anna Wong from Bloomberg Economics highlighted the influence of the Fed's Beige Book in guiding Powell's decision, while others, like Kathy Bostinsik from Nationwide, emphasized the need for more aggressive rate reductions to ensure a soft landing for the economy. Opinions varied, with some like Nancy Tengler from Laffer Tengler Investments, from said Laffer curve, if you know what the Laffer curve is, critiquing the Fed for being too reactive and backward-looking. For being too reactive to backward-looking data, while others, such as Seema Shah from Principal Asset Management, saw the move as a positive step in avoiding a recession. The cut also spurred optimism in the housing market, with lower mortgage rates expected to ease pressures on home owners. Overall, the Fed's larger-than-expected cut reflects a proactive approach to managing economic risks, though it raised questions about the timing and scale of future rate cuts. Again, I've said this before, the Sideshow Bob, who is the White House press secretary, she gets up there and tells us everything is fine, everything is wonderful, it's the best economy ever. Sounds just like the Trump administration, and we know it's not. Then you get the Fed, you get Jerome Powell, who comes on TV and has a very solemn face and talks to us about, here's what we're doing to fight inflation, and it's going down, and blah, blah, blah. But prices are still way up. I mean, anywhere from 20 to 50% across most things that you buy, from items at the grocery store, gas, energy. I mean, everything is just more expensive today. So I don't know. I don't know if I'd really be that upset with a recession with some deflation mixed in with it. Big business isn't going to like it, but maybe you should have planned ahead for the downward cycle that we go through every 7 to 10 years, and we managed to miss it 4 years ago with all that cash that got dumped in the economy. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. So if you want to get your financial plan in place, give me a call. I'll be happy to help. All right. Well, I hope everyone has a wonderful evening, and I shall talk to all y'all again next time. Adios.